Okay, so in this video I'm going to show you 4 mistakes you might be making when trading with the moving average. So I kind of understand that most of these mistakes that are being made are not intentional, but just due to the fact that we don't know that this is not what we are meant to be doing with the moving average. Okay, so I'm going to show you right on the chart so you can stop making those mistakes. Okay, so the first mistake is taking any and every signal that the moving average actually gives to you. Okay, so let me show you how this is actually wrong. Right here, as you can see, we have GBP JPY on the 1 hour time frame. In case you didn't know, whenever price is above the moving average, you're expected to take a buy, and whenever price is actually below the moving average, you're expected to take a sell. So that's exactly what we are working with here. So okay, so now I'm going to be making an illustration where I'm actually trading with the moving average back to back, so that I can actually show you how big of a mistake it actually is. So immediately I see price above the moving average, I'll just take a buy no matter what, and whenever I see price below the moving average, I'll just take a sell no matter what. Let's get into it and see how this turns out. Okay, so first off, we could actually see price above the moving average, which is telling us to take a buy, but so as you can see right here, I'm actually late on it, so I'm just going to wait to see if any opportunity comes in, and I'll see where I can actually take my trade. So okay, so just before I actually continue with the illustration, we just hit 1,000 subscribers. We're actually no longer in the hundreds, but are actually in the thousands. Okay, so shout out to Rangnok, Obina Wisdom, and also Good New Joints. Okay, so mostly if you watch any of my videos, you actually see their comments. Okay, so shout out to those that have been commenting. Even though I didn't mention your name, I still see your comments. Okay, so let's dive into today's video. Right here, price is actually above the moving average. Since we've already missed this opportunity, let's see if we could get any other one. Okay, so as you can see this right here, price is already below the moving average. And remember, we are actually trading blindly. We are actually following everything the moving average says. Place in our short position, and we're going to keep our stop loss below the candlestick here. Okay, so for risk management, we're going to be targeting like 1:2, and let's see how this actually plays out. And as you could see right there, we actually go our stop loss here despite price being below the moving average. Again, there's actually a mistake here, so let's take this as an L. So let's still do the same type of trading now. Okay, so to even point it out, you could see that price is actually above the moving average. So let's pop up another long position here. Let's play this out and see how it actually goes. And there again, for the second time, we actually go our stop loss here. Okay, so right there we actually have -2 right now. Let's continue to do the same thing if we could actually get some better. Right here we could see price is above the moving average. So when price is above the moving average, we should take a buy, right? We'll take a buy and we'll keep our stop loss below price, and let's play this trade to see what actually happens. Did you see how price demolished the stop loss? Okay, so right now let me show you what you can do in order to avoid this. So the first thing you need to know is that the market is either in an uptrend, or the market is actually in a downtrend, or the market is actually in a consolidation. 3 things: either the market is in an uptrend, either the market is in a downtrend, and either the market is actually in a consolidation. Now you might be asking, how does this thing actually prevent me from taking false signals from the moving average? Okay, let me show you how. Okay, so in case you didn't know, the moving average is actually a trend indicator. What do I mean by trend indicator? It actually shows you the trend of the market, and one weakness of the moving average is actually consolidation. So the moving average don't show you consolidations in the market, it only shows you trends in the market. So why we actually got a lot of our stop loss hits in the first example was because it's actually a consolidation in the market, as you could see here. Either is actually an uptrend or it's a downtrend. Okay, so just as you could see here, we actually have a consolidation in the market. I want you to take a close look at the moving average. What is the moving average actually telling you? Let's say we didn't know that moving average doesn't work in consolidation. Now remember what I said, the moving average is a trend indicator, not a consolidation indicator. It actually shows you the trend of the market, it doesn't show you the consolidation of the market. So this is the point where the moving average can actually give you wrong signal. So you want to know by yourself whether the market is actually in a consolidation, which is very important. So once you've already know that the market is not in consolidation, then you're actually very sure that the moving average won't give you false signals. If we're to take every signal that the moving average gave us at this point, what we'll do is that we'll take a buy here, then immediately we take a sell, we take a buy, we take a sell, which is not making any sense at all, because the moving average is not meant for consolidation. But in the mentorship, I've already explained a simpler way you can do this. Okay, so the second mistake you might be making with the moving average is using the moving average to trade news. Let me show you guys what I mean. Okay, so before you actually start trading for the day, it's very important that you actually check for the news in the market. And for you to check for the news in the market, you can just go to forexfactory.com. Okay, so right here is forexfactory.com, and this is where you actually get all the news that you have to use in the market. Okay, so today is actually a Sunday, that's why you can't see any news for today. A brief explanation of how the news works is that whenever you see this yellow colored stuff, is actually what we call the low impact news. When this news actually occur in the market, it will just move by a few pips. And when you see this orange color fire right here, that is actually trying to tell you a middle impact news. And middle impact news actually means that it should just be a mid-range, reaction. But when you see this red colored one right here, this is actually what we call high impact news. So this is the type of news you don't want to be trading with the moving average, because this high impact news will totally disrespect technical analysis. And actually see how these two candlesticks is actually bigger than all these candlesticks you're seeing right here. This is an example of a news type candlestick. So just before we continue, some of you guys have been asking me the broker that I use. The broker that I actually use is VANTAGE FX. So check in the description of this video, you see that VANTAGE FX link. You can go there, create your account, and start trading with VANTAGE FX. So one of the things I actually love about VANTAGE FX is that I'm not only trading Forex, I also trade cryptocurrencies VANTAGE FX. Okay, so let me show you guys how the news will actually appear on the charts. Now there are ways to actually trade news in the market. Since I'm trying to make this video as short as possible, I'll make a separate video on that. If I see 2 comments, I'll actually make a video on that. But if I didn't see any comment at all, that means you guys didn't want it. So now let's do a mini recap. So the first mistake is following every signal the moving average gives you. So the second one is to actually use the moving average to trade the news. So the third mistake you might be making with the moving average is using the moving average alone. So if you've watched some of my videos, you hear me saying that you shouldn't use the moving average alone to trade. So you should actually combine the moving average with any other indicator. So the moving average actually helps you to show you the trend of the market. So you can actually support this with any form of technical analysis, which can be price action, or using relative share index, or using the high Kanashi candlestick, or using any other thing that could actually help you to augment in the part where the moving average actually makes mistake. So the easy recommendation that I will give is to use the high Kanashi candlestick. So the high Kanashi candlestick is actually a simplified candlestick rather than the normal Japanese candlestick that we use. So as you can see here, we actually have a cluster of green candlestick, which means that the market is in an uptrend, and we actually have a cluster of red candlestick, which means that the market is actually going down. Now, an easy rule to using the high Kanashi candlestick is that whatever candlestick you see the most, that is actually the trend of the market. So if you actually see more of green candles, the market is actually in an uptrend. Now, as you can see, we're actually having a lot of green candlestick, which is actually trying to tell us that the market is in an uptrend. Now, to find out points of retracements in the market, whenever the market is actually in an uptrend, it actually has push phase and retracements, and it's still the same thing we want to see here. So whenever you see these little red candles, that's actually point of retracement in the market. Little red candles, until the price actually breaks the moving average. So you can actually use the moving average with the high Kanashi. Okay, so I've already made a full video covering this strategy, so if you want to watch it, make sure you check the description of this video, and I'll leave the link right there. Now, the 4th mistake that is being made with the moving average is in the aspect of risk management, directly keeping your stop loss. Now, this is one of the most popular mistakes I've seen. So the main place you should actually keep your stop loss is right above the moving average. If you're actually selling the market, your stop loss should be above the moving average, and if you're buying the market, your stop loss should be below the moving average. Okay, so that's it for this video. Don't forget to smash the like button, subscribe button, and also the notification bell. So with that being said, I'll catch you guys in the next video.